Good morning, everyone. Welcome to Pre-Market News and Views by In the Money Stocks. Today is Wednesday, July 3rd, 2013. Thank you all for tuning in. Let's jump right into the charts. We're going to start off with the usual S&P 500 E-mini futures. And you'll see that the futures today are trading lower by 2.5 points. But just a little while ago, futures were much sharply lower, down around the 1595 level around 3 o'clock in the morning. Then they put in a little bit of a sideways base. They were down about 8 points, and now they're revving up to the upside, catching a bid. Typical before the July 4th holiday. I think traders want to be a little bit on the cautious side today, but generally, before a long weekend or before a major holiday in the United States, this coming Thursday is going to be the Independence Day holiday. We look for a flat to slightly positive trading day. That's just a general rule. We'll see if that happens. But right now, S&P 500 E-mini futures are trading down about 3 points. We did just have the weekly jobless claims report released. It looks like 343,000 jobs. Who cares about the number? We only care about the market's reaction. Earlier today at 8:15 a.m., that was about 15 minutes ago, the U.S. Added 188,000 private sector jobs in the month of June, according to ADP. So that's a preliminary report that comes out on Wednesdays before the U.S. non-farm payroll report by the Labor Department is released on Friday. So this coming Friday, we'll see what the non-farm payroll report is. But again, we could care less what these numbers are, at least for me. I just care about the market's reaction. Now let's go overseas a little bit. Last night in Asia, there was a bumpy session. The Hang Seng was the big loser there, finishing down 2.5%. Shanghai also finished lower by 0.6%, although it did rally off of the lows in the morning session. If we take a look at Europe today, what we're going to see is that Spain and Italy are both getting hit pretty hard. German DAX is down 1.7%. The French CAC 40 down 1.6%. And you have the London FTSE, which England can print their own money, down around 1.68%. So pretty sharp declines going on in Europe. As we all know, yesterday they had the Portuguese finance minister resign. That could be weighing on the markets a little bit, especially over there. But more important than anything, it's bond yields. And when bond yields spike higher, especially in Europe, and they have spiked in the 10-year note over 8%, that is causing a major sell-off in those markets. So again, Europe is nowhere near out of the woods. Greece is another disaster waiting to happen, which nobody's talking about. We'll see how it plays out. I mean, Europe is just an absolute mess. It's a disaster over there. It continues to be a disaster. And we'll just see how the market shakes out going forward. But these are all things that we want to watch for, and that's why we really just follow the charts, and we don't really care so much about the news. And we'll just see how it all plays out. But today we're looking at a holiday shortened trading session. Markets will close today at 1 o'clock in the afternoon. We do have the S&P 500 E-mini. Really was getting spanked hard, and now it's rallied up. If you take a look at the U.S. dollar today, you're going to see that the dollar is slightly lower. And you're also going to see that if you take a look at the dollar yen has really come off the highs pretty sharply. Dollar yen chart is trading down by about 90 cents. It was even down more earlier. Traders should watch for a little support on dollar yen at around 99.11, 99.10. Dollar yen will also have more support around 98.20, 98.19 in that vicinity. So those are some near-term intraday support levels for the dollar yen. But for the most part, the market will do better when the dollar strengthens against the Japanese yen. Right now, it's trying to catch a little bit of a bid, but this has been a pretty good little sell-off, at least initially today. So if you want to watch that, dollar yen is really going to have an effect on the market. If we take a look at bond yields today, what you're going to notice is that the bond yield on the 10-year U.S. Treasury note is down a couple of basis points to around 2.46%. That's going to help markets. Right now, though, the markets are selling because of really the dollar yen, in my opinion. Dollar yen very much on the weaker side, even though it has caught a little bit of a little bit of a bounce around 7 a.m. But any way you slice it or dice it, that is problematic. It hurts the carry trade, hurts all those big institutions that are using that carry trade, and that's what it all comes down to. So again, be prepared for a little bit of a volatile session, at least in the morning. Things will probably get quiet down a little bit after the first couple of hours, but nonetheless, it is what it is, and these markets are not out of the woods by a long stretch. A couple of other things we really should just go over real quickly. Markets will be closed tomorrow. They will be open on Friday, though. So they will be closed tomorrow for the Independence Day holiday, but they will be open on Friday. We also have light sweet crude today trading over $100 a barrel. Light sweet crude right now is up $2.30 to 101.92 a barrel. That's a big move. Let's take a look at the USO, which is a good proxy for light sweet crude. That's trading above 36. Now, there's a very good resistance level here around 36 and a quarter. So I don't think this is going to trade much higher, but anywhere in this range right here, very good resistance. So it may have a little bit more upside to go, but around 36 to 36 and a quarter should be fairly good resistance. But oil is rallying sharply, and this comes all out of the really from the geopolitical events taking place in the Middle East, especially with Egypt. If that Strait of Hormuz gets blocked or something like that, that really could send oil prices sharply higher, and that's what's happening at the moment. So again, looks like the Egyptian president said that he will not step down, and we'll see how it plays out over there. Just take it one day at a time, one step at a time. But the USO does have pretty good resistance around 36 and a quarter should it get up there. It's already in a resistance zone though, so again it should struggle in here to go higher. But either way you slice it or dice it, light sweet crude trading over $2.20 a share, a barrel, to 101.88 a barrel. That's pretty big move today. Gold is trading higher by $6, not a big deal. Let's take a look at the GLD this morning. The GLD right now is trading around 121. It closed at 120.05. So decent little pop there for the GLD. If the dollar comes down by some chance, I think the GLD could even make a little bit of a move higher. Really, the GLD is a constant play against the dollar, and that's really what it comes down to. The dollar trading higher by default because you have all these other currencies, whether it's the euro, whether it's the Japanese yen, the British pound, all getting weaker against the dollar. So the dollar moves higher really by default. It's not that the central banks aren't printing as much dollars as they have been. They still are. It's just that the dollar trades higher because other currencies are getting printed just as quickly. So that's the deal there. Again, let's look for a volatile session, at least in the first couple of hours. Things could simmer down by 11 o'clock, I believe. But anyway you slice it or dice it, the markets were much lower. We'll see if they can hold up. I'm not sure that they will. Generally, we hold up ahead of a holiday, so we normally look for that flat to slightly positive trading day. But with all this economic chaos that's happening right now, be on your toes that this could be a little bit of a choppy session. With that said, everybody, I want to wish you all a great trading day. For those of you in the U.S., hope you have a safe Independence Day holiday, and we'll see you on the charts. Take care, everybody.